Hey there, traders and investors. Todd Gordon with Ryan Bouchey. We are New Age Wealth Advisors. Ryan, happy Thursday, bro.
Happy Thursday. I am fired up. Every time I hear that intro song, I am ready to go. And not only that, but markets have reversed this afternoon. They're green as I'm looking at them now. 15 minutes to close. Let's keep it rolling, baby.
Isn't this crazy? There's so much going on, man. We have a packed show. We try to be organized. We have a legit outline here for you guys. We really try to stay focused. We have a lot of topics. Ryan and I have a lot of fun doing this. We always get off on different tangents. So we're gonna try to stay on. But man, how many for me, you guys know, some of you know my background as a trader, and a lot of clients from my old trading business that I start that still runs trade analysis have come to us at the wealth management business. They're like, Todd, I followed you. I love your team. I love trading, but it's just too damn busy and confusing. I have a full-time job. I take care of a family. I can't do this anymore. Like you guys do it, right? It's a crazy market. This isn't 2017, 18, 19, where you can just hold tech stocks and make a ton of money. It's crazy out there, right?
No, that's been the common theme. A lot of prospects that we've talked to and clients that we're working with already. I mean, that's what they're saying, and that's been my experience even going back, even during the quote unquote good years of the last 10 years or so. But it comes to a point where it's just, especially in today's market that's moving so fast, it just becomes a lot to keep up on, especially for your full portfolio or your entire net worth, net wealth that you're managing. It can be a full-time job in these types of markets and keeping up with what's going on. And just we've talked about it, just the uncertainty that the dynamics that we're seeing today are presenting to investors and
Yeah.
traders that have followed you through your career, clients that I've worked with. Like I said, a lot of them, they get to a point where they just don't want to keep up on the day-to-day news, the day-to-day ups and downs, swings of the market, and it's a little bit of a peace of mind to at least offload a bulk of the portfolio, have it professionally managed, and then stay involved in the markets to a certain degree. We see that a lot as
Yeah.
well, right?
Yeah.
People,
They
and we
do.
encourage that for folks who want to trade and still be involved in the markets, but on a smaller scale, let's say.
Yeah. Yeah. We definitely like people being involved in it. I just keeps us on track. Makes we love our clients are so involved in the markets, but it seems like they're just doing it less and less. And so many of them come to us, and we're going to get on point here real quick. This is already right at the top. We're doing an aside. So many have come to us, and they like kind of sheepishly or with some degree of being ashamed, like I just can't do it. Yeah, it's just they feel bad and like I work so hard at trading and just being all over it, but it's just too much right now. I'm like, dude, this is a full-time job to keep on track of this, to keep on top of this market. Like, and I barely have an idea what's going on. I'm joking. Like, so don't feel ashamed. But let's jump in. We've got a good show for you.
Yeah,
Those of you who are here,
hit
go ahead.
hit
Go
your
ahead.
first hit your first topic.
Oh,
We
I
got a
am.
little off track, but let's get back on track for the
Oh,
the
this is.
heavy hitting news of
Oh,
today.
wait. Oh, okay. You want to know the heavy hitting news? RB. Aliens are
Let's see it.
real. Aliens are real. Pentagon released it. I knew it. Okay, there's like 1,500 pages out of the Pentagon that UFOs are real. Okay, here's my take. I want to know what you guys think before the people who are in here, the few of you, man. We got to reinvigorate this YouTube channel, man. This is um. So let me know if the audio is okay. So they released 1,500 pages that there was like a 1969, and there was another year where there was documented alien invasions and whatever. And I like, here's my deal, my thought on this. Okay, real quick. Like, my wife hates talking to me about this. Like, I can't help but be into it. There's over 100 billion stars in our Milky Way galaxy. Okay, RB, are you following me so far?
I'm
100
on.
billion stars. A star is a sun. Sun has planets. That's just our galaxy. there's another few 100 billion galaxies out there. So like not only there has to be other alien civilizations, but this podcast webinar is probably happening somewhere else in the universe right now. Think about that. And then the last thing I'll say is, man, if we are in fact alone, if humans are it in the entire universe, like that's a pretty scary feeling, because I'm saying this is the best we've got. Like all the craziness that humans all over, like that's it. Like that's a lot of pressure. So if we do find out, I'm just saying that alleviates a lot of pressure, because maybe their civilization is doing it better than we are. That's all I got on that. What do you think?
I'm with you. I'm with you. So this is like the opposite. So, there's things when you're a kid that you're like, you think too much of or you're scared of, like quicksand. You're always like, oh God, the next step as you're like an 8 or 9 year old, like maybe you're going to fall in quicksand. At that age, I was like, no way aliens are, there's no way aliens are real, right? As I've gotten older and just understand the scale and scope of
Right,
our galaxy and everything else,
right.
I mean, I'm not like digging into any papers or documents. I just, at the end of the day, I'm like, how could there not be other some sort of form of life elsewhere in the galaxy? So I'm with you 100%. This is the anti quicksand kind of belief. As I've gotten older, it's something that I believe more in, and it's they're got to be out there. They
It's
just
just
have to be.
it's just math. It's just math. I mean, again, 100 billion, 200 billion stars in this galaxy, 100 billion that they know of out there, and they just shot this James Webb satellite up there. Not satellite, telescope, so we'll be able to see a lot more. We're gonna get off this real quick, but if you want to see a Rogan podcast that'll knock your socks off, Bob Lazar 1315, he worked in Area 51. The detailed account of what he went through is amazing. And he talks about this element 115, which is like this super quickly decaying material that was not ever produced or found in on Earth. And they're saying that's kind of the propulsion. All of a sudden, it got added to the elemental scale. If that's the right thing to say it. So, anyways, we're gonna get off that. Anything you
I
want to
gotta
close
jump
on
into that.
that? But
No, I gotta check that out. I'm actually excited to
oh,
listen to it. So
dude, it's awesome. It's awesome. All right, so let's get into unbelievable reversal here. So here's what we're going to cover. I'm just going down our list here. We're going to hit the Fed minutes. We're going to talk about oil. We're going to talk about the IEA releasing 60 million barrels of like 35 countries, in addition to what Washington released last week. Rye's going to hit you with some really timely tax season stuff. We're going to get the economic overview. Then we're going to get into some markets. We're going to show you some technicals. I'm going to show you a key stock in our value portfolio. We're going to go through that, and then we're going to hit the closing. So we got a big show for you right here. So at the end, we also have a big webinar that we're going to announce that is next Wednesday night. It's going to be 8 o'clock. We'll give you details on that. We're going to go in a lot more depth as to what we do if you want to find out more about us. Okay. So let's hit this up top. Lael Brainerd, who's on deck to become the next Fed vice chair, she kind of dropped a bomb in the market, and she said that they are going to move into sort of the position, I think her words were like paramount importance of reducing the inflation and going into like super unwind of the Fed balance sheet. And that really sent the markets cratering. And Ryan, you wrote back to me on our chat. You're like, dude, inflation's 8%. How could it not be of paramount importance to reduce that? I thought that was a good point. Do you want to lead into that before we get into the nitty gritty here?
yeah, we've been the minutes were coming out. The minutes came out yesterday, and we heard comments from and she's typically more on the
She's
dovish
very
side. So I
dovish.
think
Exactly. Yep.
right. So that definitely, I think, probably spooked markets to an extent because she's always been so dovish. Her coming out with a little bit more hawkish statement, rattled. Obviously, we saw the markets drop as much as they have the last 2 days. So they definitely rattled the market. And yeah, our back and forth was more or less. I mean, we had a pretty high reading last month for inflation. That number didn't even include the hikes that we saw. I mean, we were seeing rising gas prices through end of last year into the beginning of this year, but we didn't see the scale of the rising gas prices like we did after the start of the Ukraine and Russia conflict. And so, I mean, I don't know if we'll hit double digits when the reading comes out for March's inflation
It's supposed
number,
to be.
but
We're gonna get it next week. It's supposed to be 8.3 in the headline. I think 6 something at the core. So
right.
we're not double digits. I don't think
Yeah,
so.
but it's considerable. We're getting
It's
close
awesome.
to that, and that's pretty amazing given all that we've been through. So, to me, the comments were surprising, and let's face it too. I mean, the Fed was on track to raise rates last month by 50 basis points, and the only reason why they scaled back on that was because of Ukraine and Russia as well, and because markets were spooked. We didn't really know how that was going to play out around the world.
Mhm.
It almost seems like it's become a little bit of an afterthought, even though I mean, there's been atrocities, and it's seems really awful, especially for the Ukrainian people
Yeah,
overseas. But definitely on our day-to-day sort of news feed, it's become a somewhat of an afterthought versus what it was a month ago.
which is very
But
unfortunate.
at the end of the day, we knew that the Fed is behind, and I think I forget who said it. One of the Fed governors said the same thing, but they're behind the curve in terms of where they need to be, and I think they
Yep.
kind of miscalculated the transitory nature of inflation and
I
where
think
they
that
were
was
kind of
Bullard.
sitting on the
That was
sideline. Yeah,
Bullard who said we're way
and
behind the curve, which they are.
yeah, and they kind of sat back. They felt it was more transitory. I still think it's somewhere in between truly transitory and long lasting inflation, but we're still kind of dealing with some COVID as we're seeing it in China and Taiwan and overseas there, and in some other more supply chain disruption because of Russia and Ukraine. So we're going to be living with this stuff for the foreseeable future, and I think we just have to expect that the Fed is going to step in a pretty meaningful way this year.
Yeah, I think so. Well, speaking of stepping in, and I found this headline, which is kind of related to what we're talking about. There, when Lael Brainerd came out and said they're paramount importance of cutting inflation and significantly reducing the balance sheet, and then you look at Reuters, like look at this headline: Fed officials to take cleaver to balance sheet. Like for Reuters, that kind of runs right down the middle and tries to stay away
Right.
from sensationalism. Like I was like, whoa, that's a big headline. Okay, so let's just kind of dive into this a little bit, and just let's review this quickly because a lot of stock traders they just for some reason I've heard this many times they just can't get the idea of of how a bond works, rates, and why that should impact the stock market. So when we went through the global financial crisis, what the Fed did is they slashed interest rates, which, as we talked about last week, slashed interest rates, which impacts the short end of the yield curve to zero. But then to also help the long end of the yield curve, bonds with 5, 10, 30-year maturities, they started taking taxpayer dollars, hitting Control P on their keyboard, print, buying bonds. Again, as the bond price goes up, yields go down, interest rates go down. So they're trying to suppress the short and long end curve. So the Fed is help me with that word. The Fed has they have accumulated a massive balance sheet, and this is it. Okay, so this is the Fed's balance sheet, which is a combination of treasuries and MBS mortgage-backed securities. So we're rolling at about less than $1 trillion, 888 billion. Then credit crisis sets in. We go up to 14. They roll off a little bit, and then all of a sudden COVID hits, and bam! So we're at $9 trillion. Okay, so I look at this and I say, okay, the headline was Lael Brainerd says they're going to take a cleaver to this. Two things. The Fed minutes that just came out, they said they're going to do 95 billion a month. Okay, that's 95 billion a month. First of all, that's right. That's about 10%, a little less than 10% per month, right? 95 billion is a percent of 9 trillion, or am I way off in my math? You're smarter than I am.
1%.
Wait, is that 1%?
1%.
Right? 9 trillion. So 10% would be
900.
900
900
billion.
would be 10.
So,
Yeah.
right, 10% of 900 billion. So 1% is 90 billion?
1%.
1%. Okay. So here he's my math guy, right? Like I'm the more abstract thinking guy who can't do math. That's why we're a perfect partnership. So
It works.
1% per month are going to take a cleaver. Not only that, Rye, but check the Reuters headline. Okay, so that makes it sound like they're just going to start selling bonds, which again, they sell bonds, rates spike. Go down here a little bit. Blah, 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 blah. Hold on. Oh, I'm going to find it. Okay, so right here. The pace of the planned balance sheet rundown, which should have the effect of increasing long-term rates, is nearly double of the Fed's QE 1719, and could also include outright sale of MBS down the road. So they're not even selling bonds. They're just letting the maturities expire. So a lot of people are worried about, okay, one, spiking interest rates, we could talk about that, but two, if the Fed is selling bonds, what they're doing is putting bonds back into circulation and taking money out of the system, which is reducing liquidity. They're not doing that. They're just letting the bond mature. They're not selling bonds. And it says right here in the minutes, it might include outright sale of mortgage-backed securities down the road. So it's not like the Fed's sucking liquidity out of the system. You follow me what I'm saying there, or do you agree or disagree?
No, I mean, I think it makes sense. And I think when you look at like the chart that you had up before and you kind of think back to how can you historically sort of characterize what we're going to see and how that's going to affect markets. I mean, it's probably similar to the taper tantrum of like 2013 in
14,
terms of
14,
kind of
yeah.
the shock of it all. And I think that's what we saw the last 2 days. And we saw a lot of volatility back then as well. I mean, the markets didn't take too kindly, right away to it. But again, it's more of that short-term shock to the market and seeing what the Fed is doing and proposing. They have to do something. We talked a little bit earlier in the show. They're making up for some lost time. They're going to use what's at their disposal. The Fed will never come out and say they're trying to just directly slow the economy down. But I mean, at the end of the day, that is somewhat their intention. When we've talked about it, here in offline, economy is still very strong right now, and I think you're going to see disruption, and I think you're going to see volatility from it. But whether you're concerned with what the Fed is saying, whether you're concerned because of some of these inverted yield curves, which they've kind of you've talked a little bit about, even a little bit of steepening this week with some of this news.
We're coming up on that, on the steepening, which is interesting.
Yeah, and these recessions don't always line up with when they're talking about this inversion or being a little bit more hawkish from the Fed. So yeah, I think you just got to, at the end of the day, take a step back and not overreact. Certainly could impact your allocation. You can definitely make some moves, but I don't think it's one of those like all risk on, all risk off type of scenarios. I think you have to just kind of take a step back, look at your allocation. What are you exposed to? What parts of the market are should do well in this type of environment versus which shouldn't, and just reassess where you are from a risk perspective. I think that's the best you can do, because you can't time these things, and it's and there's so much other data and pieces of information in just the state of our economy right now that is still supportive of where we're at. It's not we've been saying it's not all doom and gloom.
No, it's not. It's not. And I mean, well said. And I'll just pop this chart in here. Okay, so here's the yield curve. We're starting to get, it's flat. There's a little bit of inversion here between 2s, 5s, 7s, and then 10s are they're about flat. But the point I'm making, and this particular yield curve only goes back here, the point that I think is really important is look at the inversion here in 07 and 2000. We've said it before on the show, and inversion prior to the tech bubble. Look how much higher the rates are. Look across the curve. We're starting at 6-ish, 7, 5, 6, 7 up there. We're starting at 4 area. Look how much lower the rates are here. This is a different kind of yield curve inversion, as we talked about. We've talked about this a bunch the last 2 weeks. At the short end, where the Fed actually operates, it's still very much steep, and it's getting steeper. But just the fact that we've had quantitative easing for so long, the Fed has suppressed interest rates, as we talked about. It's preventing the yield curve inversion from beginning at such elevated levels with higher rates. I think the Fed wants higher rates. I think they're trying to lift the entire curve up. And by no longer buying treasuries and mortgage-backed securities, I feel like they're trying to shift the entire yield curve up. But maybe they can get a little bit of a steepening by putting more upward pressure on long-term rates, which, again, a steep yield curve like that is the shape of a healthy economy. So if you want to throw anything in there, let me know. This right here.
No,
Go ahead.
I was just going to say I couldn't have said it better myself. I think the last point you made is an important one. I think the Fed's approach to this is, and their goal will be to, on that longer end, try to get that a little bit higher. And I think that's what their intention is right now. And where we're starting at, it's a much, much different situation than we've seen kind of in the last two instances. So no, I think I like your analysis there. Spot on.
Oh, I appreciate that. I mean, I feel like longer term rates are going to cool off some of these, longer term higher rates are going to cool off some of these serious problem issues that we have in terms of hard assets and housing, just going to the point of being not affordable. It's just insane. I feel like, yes, borrowing costs are going to go up, but I feel like it'll cool off some of the bubblicious areas of this economy that do exist post-COVID. So this is, we've shown this before. We're going to hit this real quick. This is 210 spread, 10-2 spread. We went down to 19 area right here at zero. We did see brief inversion on 10-2 spread. And what's interesting is we're actually starting to see a little bit of a bounce here from the zero boundary to slightly negative. So we're actually starting to move up there a little bit.
Well, to the point of what the Fed's trying to do, I mean, you saw the 10-year go up like 20 bips over the last 2 days with news of what they're trying to do, and you can see that kind of in this chart right here. You can kind of see that separation from the two a little bit.
Yeah, good point. I think I have it. Okay, no, I can bring that up if you want to show. Here, let's see if we can do that.
No, I just kind of piggybacking on what you had said. And I had just read a little while ago how much that 10-year has gone up over just the last 2 days. It's had a pretty big bump up.
I think no. Sorry. Let me try one more time. If not, we'll move on. 10-2 treasury yield. Is that it? Yeah, there it is. Let's go 1 month. So okay, so exactly. I don't know why the 2-year is not filling in. Okay. You can see, so the purple is the 10-year. It looks like the last date I have here in Y charts is yesterday, or actually the 4th. Come on, Y charts. Is the 4th for the 2-year. So, yeah, but, if this guy's been sort of the same rate, I can check where that is. So the 2-year right now is at 2.5, and 10-year now is 2.6 on Y charts. Over here on Optima, I have 2.652. So yeah, you're exactly right. 2.652 against 2.5 on the 10-year. So we're getting some widening.
Yeah, so we got a little bit of spread.
And then I thought this was interesting. I need to look more into this. And prepping for the show, check this out. This is an overlay of 10-2 spread, which we just talked about, over 10-3 spread, 10-year 3-month spread. And again, the Fed raising interest rates, cutting interest rates, that it's dealing in the short end of the curve, which is the 3-month. Look how on track these two were in terms of these spreads. And all of a sudden, like summer of 21, they just completely diverged. I thought that was very interesting, and I don't know why yet. I need to look into that. But
and the last point I'll make with this chart especially is that the Fed has come out. I mean, they deal in the short end of the curve anyways, but they have said that they pay a little bit more attention to that, 10-year versus a 3-month versus the 10 and 2-year. Which looks a lot healthier, and as you see in this chart, and just overall, it's a much healthier spread between the two, and that's where I think their focus is on to a certain extent as well.
Yeah, it's listen. I mean, I know it's not the most entertaining stuff, but it's all everyone talks about. I mean, it's so much impact in your investing and the sectors you need to be in. We are allocated. What do you do with fixed income? What do you do with tech stocks and growth and energy? Like it's so important. what's going on here. So let's transition. Let's talk about crude. Crude back below 100. The IEA is going to release 60 billion barrels. I think that's the largest that they've ever done. And that's on top of what Washington released, which was 180 million. So you got 240 million barrels going on the market right now, which I think we're importing about 900 million a day. Was I saying million or billion? 240 million barrels going out, and we're importing about 900 a day. So I don't know. It doesn't seem too impactful to me. I don't know. Not to throw that at you, but seems to be impacting crude because crude is back below 100 pretty handily here. I'll throw the chart up. So this is crude oil futures, and I've been overlaying it on the dollar CAD exchange rate. There's normally a pretty good correlation between the two. So this is a 60-minute chart. We can go out to the daily. Sorry, I'll get rid of that dollar CAD here. Going back to my old FX days. If crude oil can kind of break below this floor at about 92 area, it looks like we're doing a little bit of it's a technical pattern. I think it's a doji or whatever it's called. Don't worry about it, Rye.
It's not where I swim.
Don't even worry about it, bro. So if we break below 93 in crude, it looks like we should go lower. But here was that article out of the Wall Street Journal. I thought that kind of put it together well. 31-member nation of the IEA International Agency is going to release actually a new reserve totaling 120 million barrels. Okay, largest on release in their 47-year history. That leaves around 60 million barrels of additional oil that will hit the market because the IEA decision is expected to be announced by next week. Okay.
Yeah, I think, stuff like this. In the U.S. announced that they were going to release some reserves last week as well.
Yep.
And I think with both of them, what we'll probably see is, it's not nothing, right? I mean, it makes up a decent number overall, and I think we'll have a good short-term impact. But I think it's going to see an immediate, and what we saw last week when it first happened too, when the U.S. announced that, I think you pulled back like 5% in the price of oil, give or take. I'm kind of going. It might have been 2 weeks ago actually too. That's kind of what it looks like is happening here as well. I think it's well intentioned, and I think it's going to be helpful in the short term, but depending on sort of the outcome of what we see, with Russia, and there's a lot of pressure on the rest of Europe to kind of cut off some of the ties to Russia, and it's I don't know what the right answer is there. We're not as dependent on Russian oil as some other countries in Europe are, like Germany, and from a punish Russia. They want to cut off some of that oil, but at the same time, are you going to punish your own people and drive prices up as well? That's a tough situation to be in, to be that dependent on a country supplying as much energy as they are to most of those European nations right now.
Yep, seriously, and natty gas is a market that is really coming up again. Europe gets 40% of natural gas from Russia, and it flows through Ukraine, and I'm kind of watching the chart here. Natural gas as crude oil has come off. Take a look at this. This is natty gas on a continuous contract from 2005, and this thing was down around $2, $1.50, and you look at the move post COVID, just been unbelievable move up. And I'm looking at this. I've been doing some research on some natural gas names. If we can get up through 7, that looks like it's a pretty good breakout in natural gas. And I got a list of value names that might go in the value portfolio, pay dividend, and also some growth names. And then you Elliott wave guys out there, I think it's a pretty simple little 5-wave count, which means that's the start of something greater. Your first upside target, based on your fib, based on your ratios, is up around 8.65 in natty gas. So I thought that was pretty interesting. If we have time, I'll take you through some of the names I'm watching there in natty gas.
Yeah, and that's just an interesting mark. I mean, even our energy. I mean, you look at because we're technically energy independent, but because we use so many different sources of energy. We do have to go, elsewhere, especially for crude and some oil. And yeah, I found it fascinating as this all happened with Russia and Ukraine, even areas in our country where there's enough being produced. Sometimes we actually go, to overseas markets because it's kind of it's really a global market for the most part in terms of where you see prices. And that's why, on our pump, when, it was so surprising, hey, I thought we were energy independent when this all started, over a month ago. But really, we kind of live in this global economy and global market, especially for gas and oil. And we're not fully independent when it comes to crude and oil because we have other sources of more, um, you know, solar or natural gas. And the other thing that's always fascinating with the pricing here, and especially because of the impact of COVID, is so many you know, uh, not refineries, but so much, especially in the gas and energy space, dropped out because they couldn't make money at where the
Yep.
prices were. And you always see such a turnover in terms of producers and drillers, and in terms of that market. So it's an interesting market where you can see some pretty big swings in terms of where the pricing is and how they can compete and be a part of that market.
Yeah, it's true. It's true. Especially natural gas. I knew a couple guys who traded natural gas on the floor, and they were saying that was, I think they used to be called the Widowmaker, or maybe that was the crack spread. But natty gas futures traders on the floor were like notoriously insane because like the swings were just so out of control.
Oh, I'm sure.
Do you want to talk tax time because we gotta
Yeah,
deal with
let's
this here in a couple weeks.
That's yeah, less than a couple weeks really. So I always laugh because I'm a CPA. My wife's a CPA. And we still haven't filed our taxes for 21. We're always a little
Yeah, but
bit
you're
late to
you're
the game.
launching a you're launching a business and you're fighting
Hey,
Boston
it's
real estate. Real
it
estate.
it
You got a
works.
lot
Yeah,
going on.
we got a lot on our plate right now. But yeah, I mean, in terms of anyone who hasn't filed, and I always like to talk both two things, right? Strategy for the prior year in terms of getting those last minute either deductions or contributions in, whatever you can do for 2021, but also like just some strategies to be thinking about for 2022. And whether you're an individual or we've seen the shift in our market and our economy over the last 2 years that you're seeing a lot more people starting businesses or having side hustles. There's other ways to save through a startup. Even if you're doing it on the side, maybe you're covered through an employer plan. You still may be able to save for this year. So in terms of things you can do for 2021, and we've talked about it, you can still do your IRA contributions if you have not filed yet. That's a big one. If you haven't filed your taxes yet, you can still contribute for 2021. If you're under 50, you can contribute up to 6,000. If you're over 50, you get an extra 1,000, so you can contribute 7,000. Whether traditional or Roth makes sense, it can kind of depend on your income, and I think that's a big thing to kind of really take a step back and look at. If you qualify for a Roth, I always say that's probably the best place to put money, as long as you're qualifying for it. And the other big one that we're talking with some clients about, but some people overlook it, is that if it's a two spouse household, but one of the spouses maybe is home with the kids or isn't working, you can actually still contribute for that spouse not working. It's called the spousal contribution, and as long as your income covers it, from the working spouse, you can contribute for your husband or wife who may be staying home or isn't working. So just because you may not have had earned income, but you're in a married filing jointly household, you can contribute to both spouses' IRAs. So it's just something that I think sometimes gets overlooked, and maybe not aware that they can do that. But yeah, your kind of cutoffs of what you can contribute and if it's deductible depends on if you're covered by a work plan. If again your AGI levels for a Roth or not Roth. So there's different strategies to be thinking about. This is where kind of we're working pretty closely with our clients, just doing some tax planning. Even though we're not preparing taxes, we can still do a lot of tax planning with our software that we utilize and the analysis that we can do. So
And
a
you're also
couple
in
last minute
contact.
things.
We're in contact with our client CPA as well, so we're kind of an advocate on that.
Yeah, and that's a really good point.
Wait. Quick question. On my same rules for my individual 401k, right? I need to have that contribution done before I file, right?
hmm hmm
Is that right?
Yeah, for
Okay.
the ownership share. Exactly.
Okay.
Exactly.
I gotta remember that.
Exactly.
Thanks. I do the
Yeah.
markets. He does the taxes and strategy and planning. It works perfect.
But this is where too, I mean, if you're a business owner and maybe you're a first time business owner and you're kind of thinking, oh, maybe you haven't been thinking about retirement, but maybe you had a better year than you expected, or um, you're planning for what's ahead and you're going to pick up business. I mean, thinking about different strategies for your business, because that's a great thing for business owners is that they have a lot of different options in how they can put money aside, and it's generally a lot higher than if you are a W-2 employee. Typically if you're a W-2 employee, you're capped at about 19,000, 19,500, last year, what you can put into an employer plan. But if you're a business owner, you get some different ways, and depending on how you're structured, and depending on what type of plan, whether it's 401k, a SEP, if you have multiple employees, and this is where in my past life and now working with business owners, helping them kind of think through what's the best type of retirement plan for them. And this is where kind of planning for ahead can be so critical, is really kind of looking at, okay, how are you structured as a business? Are you single member LLC? Are you filing as an S corp? Do you have employees? Maybe you have a spouse that's working for you, and there's different ways to take advantages of some of our tax laws and tax codes with maybe a solo 401k where you can bring a spouse into the mix, if they're working, he or she is working for you and putting some hours in there. So there's just a lot of different options, and in so much like anything in personal finance, especially, is not so much a right or wrong. It really kind of depends on what's important to you and what you're trying to save for. If you're really trying to max on some retirement savings, then there's ways to structure that make more sense for you. If you want to put a good plan in place for employees to, right now it's such a tough market to hire people. If you have a small business and you want to make it look attractive to employees that you're hiring, if that's important to them, hey, how do we structure this for them so that, hey, maybe your job opening looks a little bit better than the guy down the street. So there's a lot of things to think about, and that's why I'm not kind of getting into specifics, because there's no like one way is the best way or one way is the right way. There's just many different options, and we've worked with business owners. I've worked with even medical professionals that maybe are doing their own thing, and kind of coming up with different strategies to put as much away as they can, whether through, again, like a 401k or SEP, or even we've put together defined benefit plans for clients who have been able to put, depending on their level of income and what they're doing, can put considerable money away. So again, it really comes down to what's important to you, what you're trying to save for, what type of business you're running. But there's a lot of ways to really plan and maximize what you're doing, both as an individual or a business owner.
Amazing, amazing.
I kind of went
No,
long
man.
there. I was just kind of
Nah, it's
free-flowing for a little
awesome.
bit. But
It's awesome. No,
and
it's it.
yeah, and these are some of the things that people aren't thinking about too. And like I said, if you're covered by, maybe you have a company 401k plan that you're not an owner of, you're just a W-2 employee, and maybe you started a side hustle last year and you're starting to make some income off of that. You can actually, if you're maxing out the work plan, and you're like, where do I put some of this extra cash flow or money? If you're in that position, you can actually put some to a separate plan. If you're, again, if you're created your own business, so you can actually contribute to both plans in certain cases. So again, there's a lot to think about. Not everyone is kind of aware of sort of the intricacies of how the different plans can play, and what's most advantage to them. But a lot of ways to start planning, or put money away last minute from what you earned last year. So again, whether you're an employee or started a business, these are things you got to start thinking about, and really kind of come to the table with, of like, what do you want to get out of some of the benefits of being a business owner.
Throw a like on that,
Boom.
guys. I mean, just spewing knowledge in terms of financial play, and that's the key. To be properly positioned in your portfolio, understand what your risk tolerance and risk profile should look like, where you're going to hit your goals, and making smart strategic steps each step of the way each year as you approach retirement, get to retirement, after retirement, will help you get to the goal. So well said, man. Well said.
In the last piece I'm going to put out, so we talked a little bit about business owners. If you are a
Did I lose him?
what they call a mega Roth contribution.
Oh wait, say I some reason your audio dropped for about 5 seconds. Start again. Oh, he's
Option. This is something that
ah.
you do away with it. It's not, may not be on the table for much longer. They were trying to write it away in the Build Back Better Act last year, which never got passed. I don't know if it'll get passed this year or not, but something to potentially consider, trying to take advantage of, especially early on in the year. So if you're not familiar with the Mega Roth, shoot us an email or get in touch. Maybe you do qualify at it for your work, and you can put away like considerable amount of money towards a Roth, which is such a great option if you can qualify for it and you have that extra cash flow that you could actually take advantage of it. So that's something I've worked with clients on in the past that is really a great savings tool and opportunity that, again, sometimes gets overlooked because there's some intricacies to it, but with the right plan in place, it's a great savings tool.
Nice. And again, the audio dropped about 20 seconds in the beginning, and you're talking about backdoor Roth and mega backdoor Roth, correct? That's the vehicle we're talking about. Good.
The mega backdoor Roth, yeah, that's through your work. That would be through an employer 401k type plan, so it may be available to you.
If that 401k is set up in a proper way where you can roll that money over in an IRA and then immediately pay taxes on it, and then you have that as a Roth all the way into retirement where there's no RMDs at the end. And it's easier.
Yeah.
It's much easier to hand off to your heirs.
And you actually don't pay taxes because it's actually post-tax contributions. So you just don't get a write-off for it. It's a post-tax contribution that you convert immediately to the Roth component of a 401k plan. So your 401k plan needs to have post-tax. There's two big criteria. It needs to have a post-tax contribution option, and it has to have a Roth option. And if it has both of those, you could do, like I said, what's called that mega backdoor Roth, and you don't pay taxes on it. You don't get the deduction for extra money you put towards it, but it's a great way. You could put up to, in some cases, $20,000-$30,000 if again, if you qualify and you have that cash flow into a Roth, and it's just a great option. And like I said, it may be going away in the next year, and so while it's still on the table, definitely something to kind of look into and consider. It's a great savings vehicle for those that can do it.
Well put. Get a hold of us. Ryan just dropped a ton of knowledge on us right there. Get a hold of us if we can help you on that. We only have a couple more minutes left. Ryan, do you mind if we hit markets here real quick?
Yeah, hit it.
Okay, so this is going to be important. One of the largest holdings in our growth portfolio, Tesla. And we're going to be talking, we'll look at the Tesla chart here quickly, but let's talk about the owner of Tesla. He's made the news recently. I can't wait to get into this one. So here's monthly chart of Tesla. Unbelievable, still trading. I don't know what's probably in terms of forward PE. I would say they were at 1,100 forward PE. The stock has come back quite a bit. They were 215 PE. Now they're only trading 100 times, 98 times forward earnings, 215 PE. So that multiple's come in a lot, right? Reverse forward and current PE, but impressive that we're only $100 off the highs. Unbelievable move back here as the Nasdaq was coming off. This is the weekly chart here, so just kind of flirting with breaking a new highs in Tesla. And the big news here is him taking a 9% stake in Twitter, and I thought this was super funny. I think we're remiss to not hit this. And I threw something on Instagram. You can get me a Flash Crash Gordon. And I got to tell you guys the story somehow of why my name was Flash Crash. Had to do with my name on Fast Money and then trading during the Flash Crash way back. So let's see. Where was this thing? Okay, so I threw something. Oh, by the way, did I tell you? I'm guest bartending tonight at Bailey's. There's an event Sipping for Seniors, the Saratoga Senior Center. So it's me and about
Oh,
five
nice.
other guys. So I'm guest bartending. So I threw this up on
Nice.
Instagram. There's Eshu. That's Mike Eshu. He's a buddy of ours. I threw his face in on the cocktail. Remember Tom Cruise? And there's Dr. Pat Zurich, our other buddy. But I thought this was a riot. This was Elon's. I threw this on Instagram. Elon's tweet of him smoking weed on the Joe Rogan show, and his tweet was, "Twitter's next board meeting is gonna be lit." Like
I guess when you have that much money, you just, you start getting to a different point in your career, and he's a riot. He's the
oh
best.
my god, he
He's
just
so brilliant and such a troll, and it's so funny.
such a
Some people
troll.
may not like it. I don't know. I think it's great. I think having one of the world's richest people kind of be hilarious and doing good, as I love seeing it. I think it's so cool.
I love it, and and listen, why is he doing it? I mean, he threw out a tweet earlier. He was saying, Twitter's become the de facto town hall. It's the it's the location and forum of public discussion. And there's video of the now CEO Parag. I don't know how to pronounce his last name. Saying that basically 1A First Amendment doesn't apply to them. It's their job to facilitate a healthy national debate according to what they see as healthy, and that's a huge problem. And Elon got in the middle of that, and he said, "Well, wait a minute here." He started tweeting. He goes, should 1A apply to them? And should I start a competing platform? This was like 2 weeks ago, week and a half ago, and everyone said yes. So he just stepped in and bought a majority share of Twitter. Now I think he has 4 times the amount of shares as Jack Dorsey. So pretty interesting. And look, Elon is very, very much against the woke movement, and I don't know. He's tried to. It's worked against him several times. The White House recently did invite him to that August meeting with the big 3 automakers. Jen Psaki said, "Well, I think it's Ford, GM, and Chrysler because they're the biggest members of the United Auto Workers," and he's going out against this woke movement thing. So we'll see. It hasn't had an impact on Tesla's share price. The stock looks good. We can take a look at Twitter here real quickly. We don't hold Twitter. I really have no interest in holding Twitter. It's like a 30 billion market cap company. They've produced 0 returns since IPO. Just a complete waste in such an important. Right now we're talking about it. It's almost like the public phone lines. When we actually had a phone on the wall that went ding, like and to decide who can speak and who cannot. I thought that's sort of stepping into some interesting territory. So. The company hasn't been able to monetize, and now we'll see what happens. But a couple.
I think it's good for. I think this will be good for Twitter. I think it's going to be good for the user too, because as you said,
Sure.
I think there's an element of wanting to be a little bit more open there, and maybe they can get their act together a little bit and try to make some money for shareholders.
For shareholders. And that's what it
It's
comes
such an
down
impact.
to.
It's such an impactful platform, and for them to not be able to monetize it is it's almost shameful. But
It is.
hopefully they get it together.
Yep. Yep.
All
All
right.
right, so let's hit this real quick. I'm gonna finish up with the indexes. I told you we're gonna do them, and then we'll lock it down here. So we'll do some technical stuff real quick. I know we're coming up on the 50-minute mark, but we got to hit technical world real quick. This was the massive sell-off in the S&P that created so much controversy and negative bearish sentiment that was even worse than the 2020 lows and COVID and even global financial crisis. Okay, no problem. Ryan's saying he's got to get ahead. No problem, bro. I'll go quick. So ABC down. It was just a correction. Getting down. I thought this was interesting on the 30-minute here. So let me go right here. And basically the sell-off that we've seen since March 30th, a nice little ABC correction. And basically in the technical world, when the 2 legs are equal, it's as simple as this. It's like my 8-year-olds could draw this. When the 2 legs are about the same, and it kind of does like a double bottom, it doesn't want to break below it. That kind of tells you in the S&P that it might just be a correction. And the rally back that we saw in the NASDAQ, in the S&P today, that was kind of indicative of it. So Certainly interesting. Okay, so from there, a few things we didn't hit. We wanted to talk about commodities. We want to talk about sectors. Maybe we'll do a follow-up video tomorrow on that. Talk about some healthcare that's leading. We have a stock that is a big holding in our portfolio. Want to talk about that. So more to come. Guys, if you watched it, you enjoyed it, you made it this far, thank you. Please hit the little thumbs up button if you don't mind. We got to bring attention back to this channel that's been dormant for so long. And Ryan, great job on tech stuff and everything else. Really enjoyed it, man. Thank you.
Yeah, good stuff today. And anyone who, if you're not subscribing to the newsletter, we're putting out some of this information weekly. Go to our website, newagewealth.com. And if you have any questions, especially as it relates to any of those tax issues, maybe you're a business owner, maybe you just started a business. If you're trying to think what's best for you, shoot us an email. We can help try to help guide you. So go to our website. You can contact us there or sign up for our newsletter. And yeah, keep following. And we appreciate you watching today for sure.
Wait, you can't go yet. We forgot one important thing. Webinar next week. You can take off if you want to. If you got to get out of here.
I mean,
big webinar. Yeah, I got it. If you want to pop off, but hang in as long as you want.
All right. Well, I'll see you. Yeah. Take care, man.
Okay. See you, bud.
Bye.
So we're doing Ryan and I are going to get together. We're going to do a big webinar here next Wednesday at 8 p.m. So we're going to talk about basically our entire approach to the markets, to planning, to financial planning, tax strategy, market allocation in light of all the volatility that we've seen. I mean, everything we've talked about here with interest rates and yield curve, inflationary pressures, geopolitical, there's so much uncertainty out there. So we're going to do an important webinar. We're going to take you through sort of, A to Z here in terms of effectively financial planning, strategy, how to approach your portfolios, how to remain accountable to your goals, short, medium, and long term. So ultimately, you get to where you want to be in retirement years and live the life you want to live. So, inflation, minimizing withdrawal risk, face the uncertainty, the stress that investors feel with so much news just pelting them and insulting them every single day. So we're going to take you through our entire process. We're working hard on this event. So I'll drop the link in the description here, and I'll see if I can drop it in the chat right now if you'd like to sign up for it. There's the link right there. So it's going to be Wednesday night at 8 o'clock. Ryan and I both be there. And we are going to do a bonus on this too. We're going to select 5 people to do a complimentary portfolio assessment, no obligation. So there will be a giveaway there on this event. So check us out there. Link is in the YouTube comments, and I'll put it below. And we'll see you there, guys. Thanks again. Really enjoyed it. Throw a question, comment, anything you'd like to see on future shows. Give us feedback. Is it too long, too short? More of something, less of another. Love to hear your feedback. So thanks, guys. Appreciate it. And we'll see you next Wednesday. Okay. Take care.